Hi, welcome back to the channel. I'm Jonathan. It's been a very big couple of months for Rivian as they start production in September, with customers receiving production vehicles produced in the Illinois plant. Additionally, if you haven't heard, they're going to IPO. Because of this process, the secrets of Rivian are being unveiled as the IPO documents, the IPO filings have been released. Many of the highlights of the S1 filing, which was released at the beginning of October, confirm what we already knew, and there are some interesting details. Rivian initially filed confidentially for the IPO in August 2021, but the details have come to light, and we can finally learn how big the losses for Rivian are, what Rivian has proposed for their ticker symbol, and a host of other details. The IPO is one of the most anticipated IPOs of the year, especially since the media wants Rivian to be the top competition for Tesla in the pure play electric vehicle category. Rivian plans to launch in the US and Canada almost immediately. In the near term, they will start delivering to Western Europe, and eventually major Asian and Pacific markets will be targeted. They plan to service these markets through building out local supply chains. When Rivian finally IPOs, it will provide retail investors and the likes of Bank of America, Barclays, Deutsche Bank, Wells Fargo, and Wedbush the opportunity to own part of the adventurous spirit. Here are my highlights from the Rivian S1 filing. Rivian is burning cash and racking up losses to the tune of over $2 billion over the last 2 years, and even more over the lifetime of the company. In 2019, the company lost $426 million. In 2020, Rivian lost over $1 billion. And in the first 6 months of 2021, the Tesla rival lost a staggering $994 million. Rivian seems to be competing on the lose the most money front as well. Losses are to be expected because of who Rivian is, a pre-revenue electric vehicle manufacturer. The massive losses have been driven recently by production preparation, including manufacturing ramp-up and increased research and development costs. The company spent $766 million on R&D in 2020. In the first half of 2021, the company has already spent $683 million on R&D. If you're enjoying this video on Rivian, let me know by liking the video. As of the end of September 2021, Rivian has almost 50,000 pre-orders in the US and Canada. Since the pre-orders require a $1,000 deposit, they serve as a measure of intent to purchase. This is good because they are designed to help Rivian gauge the demand for their vehicles. However, pre-orders are non-binding and refundable. Don't talk to Lorison Motors about pre-orders. Even with the large number of pre-orders, Rivian expects to see a significant portion of their near-term revenue from the Amazon purchase agreement. That leads me to believe Rivian does not expect to ramp up production and deliveries parabolically, since only a few thousand vans are expected to be delivered to Amazon before the end of 2022. We don't yet know when the IPO will take place, but almost certainly this fall. We should expect it sooner rather than later. Judging by Rivian's disclosed risks, the management expects losses to continue for the foreseeable future. This shouldn't come as a surprise for anybody who's following Rivian's situation or the industry in general. Vehicle production takes time and money to get it right. Till R&D turns into production, production into deliveries, deliveries into sales, and sales into profit, Rivian will continue to lose money. After all, Tesla only started making money recently. Additionally, Rivian has very large ambitions. They have defined their TAM, total addressable market, and SAM, serviceable addressable market, to be $9 trillion and $1 trillion respectively. These are staggering numbers and need to be examined more thoroughly. Total addressable market would be a long-term target of around $9 trillion. The $1 trillion serviceable addressable market is deemed to be addressable within the next 3 years. Even after seeing the calculation, these numbers are insane and seem large. Included in these optimistic numbers are the following. The TAM represents 81.1 million new vehicles globally, as if they were all priced at $67,900 each. The SAM represents all 7.9 million vehicles in the US, Canada, and Western Europe, as if they were all priced at $67,900 each. Oh yeah, Rivian would have to convince customers to buy their vehicles even after they produce them. The most important part of these figures from my perspective is knowing how Rivian estimates lifetime revenue and what they see as the target market. Rivian has chosen a preferred ticker symbol. Stick around to find out what it is. Rivian will sell directly to customers, skipping the dealership, just as Tesla chose to do. Additionally, Rivian expects to generate most of their short-term revenue from vehicles. That makes sense because Rivian is an EV manufacturer. Interesting details show up when we look at how Rivian sees themselves in the future. In the longer term, Rivian expects to generate revenue from value-adding services throughout the customer lifecycle and deepened relationships with customers. Sounds ambitious, but it shows me that Rivian really wants to be a service company to every extent they can. Last chance to comment on your expectation for the ticker symbol. According to the S1 filing, Rivian will be going public on the NASDAQ, as should have been expected, and RIVN is the preferred ticker symbol. And here's your gift for guessing correctly. To learn more about Rivian and its massive valuation, check out this video on screen now. Jonathan out.